Hey, what's going on, guys? Today I want to talk about DIA and pretty much what the ETF is, what makes them unique, who manages the fund, what are their top holdings, and why I think you might be interested in this ETF. So let's go ahead and dive into it here. So this is our website. We created a new calculator. Ignore the ads. But it's just an income calculator. So the cool thing about DIA, it's a monthly dividend payer. So let's go ahead and say we have 100 shares. DIA is priced, pretty high. Little market update there. It's pretty red this morning, down about $5, but $316 a share. That is the current price of DIA. So it's going to cost around $30,000, in order to get 100 shares. So it's a little bit price high, kind of like SPY, kind of like QQQ, but it is a very popular ETF out there. It's been around since 1998. It tracks the Dow Jones Industrial Average, pretty much the 30 most prominent or blue chip companies listed on the U.S. stock market. This is the index that it tracks, DJIA. So definitely go check that out. One of the cons, I want to talk about first thing is the expense ratio, 0.16, a little bit higher than SPY or VOO. So do keep that in mind. I think it's because, a little bit older of an ETF, but it's a monthly dividend payer. So I think, the expenses are going to be a little bit higher just because the fund manager has to deal with, paying out monthly payments there versus quarterly, whereas VOO is quarterly. So I don't know if you guys can see that or not. Let me go ahead and make this a little bit bigger. So these are the top holdings as of March 13th. You got United Health Group, Goldman Sachs, Home Depot, McDonald's, Microsoft, Amgen, Caterpillar, Visa, Boeing, and Honeywell International. So, these are more large cap value stocks. You don't see really, other than Microsoft, a whole lot of tech companies. Visa's, a tech company too. So those are the top 10 holdings. Let's go ahead and go back here to the website. Zoom back out a little bit. So a cool thing I like about DIA, it's very liquid. You can, sell options. I believe it's once a week. I'll have to double check that. But the cool thing about that, you're getting a monthly dividend, which is, for the most part qualified. I think most of these companies are probably there might be some REITs in here as well. So you might get a little bit of ordinary, but for the most part, from my understanding, disclaimer, not a tax advisor, but I think most of those dividends are going to be qualified. So that's good. You're getting on a monthly payout. It's going to vary a lot. I looked at, I was looking at their history, the other day, but, so, it's not going to be a consistent amount just because, dividend companies pay out on different months. So, do keep that in mind. I'll pull that up, the dividend history here in a minute after I go through this quick page we have on our site. So this is just kind of illustrating, how many covered calls you could sell, right, with the portfolio size. Like I mentioned, it's going to be around $31,000 in order to sell your first covered call. So it's kind of in between here. 50,000, you're kind of getting close to almost 2 covered calls at 157 shares. 100,000, you're going to be able to do 3 covered calls a week. So that's pretty cool. You're going to get, $2,000 a year in dividends broken up on a monthly payout. So pretty cool with that. The performance last year was down 7%, not as volatile as the S&P 500 or the NASDAQ 100. So 7% last year is pretty decent, but once again, it's not as, the upside isn't as great as, SPY or QQQ in the green years, just because, like I mentioned, they're investing in value companies. So, their beta is not going to be quite as high there. Dividend history, pretty cool here. I'm not sure if there's some stock splits within here along the way. So I'm not really sure about this negative 3.76. There may have been, some stock splits going on to cause that. Some frequently asked questions. How often do they pay? They pay monthly. Are the dividends ordinary or qualified? Not tax professional, disclaimer. Do your own research. But from my experience, I think it's going to be qualified. Are they actively managed? No, it's a index fund. It tracks the Dow 30, and they pay monthly, like I mentioned, every month. I believe it's the third week of the month, so that's cool, something to consider. And then, is it safe? We believe so. They're focusing on blue chip stocks. Obviously, depending on the market, blue chip stocks can cut their dividends. So always, do remember that. But remember, you are diversified. Investing into multiple different stocks there. So this is their website. I'll leave a link to their website down below. Yeah, that gross expense ratio, that's kind of, a con with this ETF. You're going to pay a little bit more in fees, but you are getting a monthly payout, so that's pretty cool. Assets under management, pretty big fund there. So they're tracking the industrial average ETF. Yep, 30 blue chip US stocks. So pretty cool there. So yeah, distribution frequency, monthly dividend payer. So these are some of the statistics. I want to see if there's any. I don't know if their website is going to tell us like the turnover of their holdings. 2% yield. It's a little bit better than the S&P 500. Looking to see if they can tell me what the performance is. Since inception, around 8%. So a little bit less than the S&P 500, but the beta isn't going to be as high. So if you're looking for something not as volatile as the S&P 500, this could be a great option. You could get 100 shares and then start selling calls against it. So it's a 2% yield, but I think you could easily increase that with the implementation of covered calls. So pretty cool option there. So these are the different sectors. IT 20%. That's actually a lot higher than I was thinking. But needless to say, 20% IT, financials 16, industrials almost 15%, healthcare 19.6, consumer discretionary 13.74, and so on. So a little bit less of allocation. IT still 20%. Looks like it's leading the way. Healthcare is pretty close, but yeah, I think that's a quick little rundown. Let me check to see. So I checked. So yeah, so we went through all of it. So yeah, I wanted to see. Let me check on Morningstar. Let me pull another window open over here. 1 second. Morningstar DIA. Because Morningstar is a pretty good resource I like to use. All right, let's pull back up here. So according to them, they're a 4-star ETF, 2% dividend yield, 27 billion assets under management, U.S. fund large cap value. So yeah, like I mentioned. So let's go to the risk tab here. I like looking at this. This will tell us our beta. Okay, so beta is a 0.93, so a little bit less. I believe SPY is just the market, so it'd probably be a 1. So it's 0.7 of a point below SPY. So theoretically speaking, it's gonna be a little bit less volatile. I'll just quickly confirm that SPY should be like a 1.0 beta. Yeah, so the beta for SPY is 1.0. So yeah, that's just the two comparisons there. But yeah, I think that's pretty much it for this video. Just wanted to briefly talk about DIA. It's an ETF I like, and I think it makes sense for you if you want monthly income, right? A lot of people are buying realty income and all these individual stocks because they like dividend payers. This is another dividend payer that pays monthly. The expense ratio is a little bit higher, but I think that can easily be offset. Whenever you get to the point of being able to sell covered calls, because you're going to pay, like $16 per $10,000 invested. So, you can do the math there. But, I think once you get to that 100 shares plus level, you can easily offset that, with selling covered calls. So, just keep that in mind. DIA is another ETF, like I mentioned, that you guys should check out. It is a U.S. fund, large cap value focused, tracks the Dow 30. So yeah, if you're looking for an ETF that pays monthly and tracks the Dow 30, definitely go check out DIA.